Hi everybody, this is TJ with PTU Trend Jumper, Premier Trader University and NetPicks.com. I wanted to follow up and cover some more of our Forex trades. A few weeks ago I covered about 6 of our major pairs, and we're following a lot more with the Trend Jumper. I know I personally am trading close to 20 different pairs with daily charts, and because they're daily charts, I'm able to manage these trades quite easily. I only have to look at my charts at the end of the day, once a day, place my trades. And one of the great reasons for using this method, one of the things I love about it, is it lets you take advantage of the major moves in the market. Each Forex pair typically is going to give you 1 to 3 monster moves each year. And if you wait around for one pair to give you a big move, you might be waiting for a while. And different pairs move at different times, different cadences. So I like to trade a lot of pairs, and in such a way I'm as active as I want to be. I'm going to have numerous trades each week. If you remember in the last video, I talked about how I like to use this strategy to build a position and really take advantage of the big moves that occur. And with Trend Jumper, it's really easy. Every single trade is identical as far as how I handle it. Every single trade has a really great risk reward. I'm able to scale in and add to my position. I got to deal with some FIFO issues, first in, first out, but there are techniques to do that. And it's something we talk about in training. So I thought I'd cover some of the other pairs that I am also trading. If you want to reference the earlier video, take a look at the January 15th post, and you'll see some of the pairs I like, and in this video we'll cover some different pairs. So let's start with the Aussie Yen. The Aussie Yen has been just phenomenal, and if you go all the way back to November, this particular trade right here on November 15th, this trade literally went all the way up. In fact, using the techniques I teach for trailing, this trade, it went all the way up to here. This is where it stopped out. And that was on January 16th. So 2 months, literally. Along the way, well, this trade set up and didn't trigger in, ended up canceling. This trade triggered in, zoomed to full target, and now we're trailing another position. This trade also, now, you might have missed this. This was on Christmas Eve. So if you missed it, no big deal. You're still trailing the 2. Then you have this one. And this one almost hit full target and then came off. And again, based on the techniques that I teach with this strategy, would have stopped out here for just a partial profit. But the other 2 were still going. And so check this out. This trade got 210 pips to its first position. The second position trailed all the way up for 2 months, 882 pips. And every day when the bars close, I would just come in here and adjust my stop. This trade canceled. It's a non-trade. This trade got 111 pips to here. The second position came off with the original position for 621 additional pips. The Christmas Eve trade zoomed 66 pips in one day, and you would have trailed that one as well. That would have got another 480 pips. If you didn't get it, okay, fair enough. And this one here, this was a New Year's Eve setup. Come in on January 2nd, though, and place that trade, and the market opens. And that one, like I said, a few days later, almost hit the full target, came off, and just barely stopped out. I mean, that was just bad luck, but that's the technique we use when you've got 2 other open positions. I handle these a little more conservatively. So that doesn't mean you have to. You could have stayed in for the full target and even more profit, but I posted this as 105 pips per position, so another 210 pips. But all in all, you could see, I don't know, 1,500 pips or more in here, maybe close to 2,000 pips. That brings us up to the current day. This one came in on January 31st, and it hit its money management level, and the stop has since moved up to here. It's nearly risk-free. We're trying to survive a pullback, We'll see if we can even get more out of this. If it stops out for a tiny loss or a tiny gain, you know, it's just another trade. Doesn't really matter. So before those trades closed, leading up to the end of 2012, you can see how some of them closed actually in January of 2013. I didn't count those yet. The Aussie yen was up nearly 4,200 pips. Now that I updated the results, including those more current trades, as of today, not counting the open trade, the Aussie yen is now up 6,823 pips. And all these pairs in blue are showing the current upgrade from what we had nearly a month and a half ago. I mean, the pound yen is up over 3,000 pips just in the last few weeks alone. But again, the yen has been on a real tear, and that just is an example of what I'm saying. You can catch these huge moves 1 to 3 times a year with this strategy. Well, let's take a look at one of my least favorite pairs to trade, the Euro-US. Obviously one of the most popular. It started the year with a small loss, and you know, if you go to the right edge of the chart, it looks like it had a good chance of succeeding, but it just barely triggered in and came right up and stopped out, and that lost 89 pips per position, minus 178 pips. But check out the trade. Here's our entry. Here's our stop. The fixed position target for our first position was all the way down here. And so we're risking this little bit to make this big amount and then plus whatever we can trail. Anyway, it turned right around and went long. And again, you know, here is your stop. Here is your entry. So we're risking this little bit to make this much. And look what happened. Move these out of the way here. Well, it almost stopped out, but that stop was perfectly placed on more than one occasion, and it took several days. You know, it took literally 2 weeks or so or more. Finally hit its full target for 290 pips. Meanwhile, along the way, I'm adding to my position right here. And that one also almost went to the full target. This one came off, and with the technique I use, it stopped out right here, the second trade, and that got 76 pips times 2, 152 pips for both positions. This earlier trade stopped out a little bit lower, but still managed to grab 116 pips. So small loss here, nice gain here, partial winner here. Beautiful. I mean, it's a great way to start the year, the first 3 trades. Nice and positive. I'm not showing you anything different. These are the techniques that we use with every single pair. It's pretty much the same thing across the board. Okay, let's look at one more. This is the New Zealand yen cross. And dating back to November again, there was a small loss. You know, we saw this on the Euro-US. Unfortunately, ticked in, turned around, ticked out. Small little loss. It is what it is. Minus 99 pips times 2 positions. But it turned right around and picked up this really nice gain. 150 pips just on one position. I mean, that one position almost completely offsets the entire 2 position loss. But meanwhile, it trailed all the way up to here for another 305 pips. And this brings us into December. This trade almost triggered in, but it didn't. So no trade here. And then, you know, don't sit out the holidays, or at least be ready to trade on the very next session, because this set up right at the end of the year on the 31st, just like that other trade we saw. Could have grabbed it right here on the open if you were on your toes. Again, it pays to be on your toes. 337 pips to the target. This trailer didn't make quite as much. It came down and stopped out, but still another 183 pips. Definitely worth the effort, because you can see how you can catch some really big runs. But I mean, look at this. It's just 3 trades. It takes so little time to manage each day. This trade, unfortunately, didn't trigger in. It barely canceled because of our rules. So unable to grab that. So that brings us up to here. This is January 29th. You know, about a week ago, it triggered in. 2 days later, 156 pips and still trailing. And the stop is right below the green dotted line. And that's going to profit no matter what. But if it holds and heads higher, who knows how long it can go for. And again, I'm just managing this the exact same way as you've seen me do every other pair I've shown. Since the beginning of 2012, nearly 3,000 pips of profit with this very easy style of trading. All right, let's look at one more. This is the Euro-Pound cross. This is not a pair that I've covered in great detail, but it's one that is part of my repertoire. I mean, this is in my group of 20 to 22 pairs that I trade on a regular basis. And you can see, just looking back here, leading up to the end of 2012, this trade was a small winner. It got all the way up to the middle target, a little bit past, and it came off right here for a partial profit. The add-on trade, same deal, jumped up past that middle target, locked in a tiny bit. This was also an add-on trade, took that one too. That one turned around and stopped out for a small loss. And then this happened. January 10th, the setup, the next day, triggered in, and pretty much zooms, hitting 129 pips and continuing to trail all the way up to here. Just stopped out actually today for 498 pips on the runner. Meanwhile, on the 24th, about 2 weeks later, an add-on trade. That one also had no problems picking off 172 pips, and that one stopped out today as well for 99 pips. So many opportunities with this very simple strategy. And the great news is we're releasing a very special Forex version of the Trend Jumper that includes these exact strategies, and they will be usable on TradeStation and NinjaTrader. But for the first time ever, we are releasing this very powerful strategy for MetaTrader 4 as well, and it's going to work exactly the same way. That's coming out later this month. Keep your eyes and ears open. You're not going to want to miss that webinar. We're really excited. Thanks for joining me, everybody. This is TJ with PTU Trend Jumper at NetPicks.com. See you on the next video.